Good morning. This is Bipin Chandriani, realtor with Coldwell Banker Preferred, Exton, and host of weekly show Small Biz Spotlight. This is our first in the series of home buyer seminars. And Sweta Haria from Excel Mortgage Corp USA is here to take us on a journey to help home buyers prepare for it. If you are a first time home buyer, you are a renter, or looking to upgrade, there are certain steps you need to take before you start looking at homes, before you decide what kind of home you want to buy. So I would like to welcome Sweta Haria to the show. Thank you for coming. And tell us about who you are and what do you do and what areas do you work in, and
Sure.
what are the first steps a prospective home buyer or a renter should be taking to jump start their home search journey?
So my name is Sweta. I work for Excel Mortgage Corp USA, which is located in Paoli, Pennsylvania. We are a small mortgage broker firm. We work with different lenders who have different options available, different loan products available, and we try to match up with our clients and the best product that would help them the best in getting a good home in their budget, and help them make it a smoother process, the whole home buying process. It's the first step obviously would be to buy one, but once it is bought, we make sure that it is a smooth process all the way to closing till you are set up inside the house. So I've been in this industry for 5 years now, and the firm itself has been here for more than a decade, definitely. And we have a team of really good experts who we all work together. If there is anything going on that needs special expertise, we have some or the other person in our firm to help it out and solve the issue. But usually, we try to get the best lenders available for our clients. When it comes to starting the process of home buying, the first foremost step, find where you want to be. I mean, I personally am licensed in Pennsylvania and New Jersey, so I can help people from either states. Even if they're moving cross state, that's not a problem. We can help them. Find a spot, a location that interests you, but don't stick to it. Gather information about what is going on in that area. You may want to contact a realtor in the area who is specializing there, as well as, of course, a mortgage broker who can help you find out what the costs will be to buy a home in a particular area, which will give you an idea where you stand, whether that would be a location you should be looking into, or maybe expand your horizons, expand your geographical locations just to accommodate the cost that you are willing to spend. Definitely one thing I will tell you, if you are planning to buy a home in the next few months, don't try to buy a big ticket item or open a new debt, or people do this, and this is sometimes it's good that you're paying minimum payment and not paying the whole balance of credit cards. But once you start looking into homes and want to buy it, paying off a few cards, don't put all of them into minimum payment. Pay a few of them. That will definitely help with you when they run the credit check on you. The numbers will be better, because believe it or not, credit score numbers definitely make an impact on what the rates are you're getting, or what other options you have to be able to get something in your budget.
So that is where the debt to income ratio comes into play.
Debt to income ratio, yes, that is also a part that helps, because if you have debts like car loans, car installment, lease payments, any other debt, student loans also for that matter, that is included when they are looking into your debt to income ratio, your monthly income versus your mortgage payment, your escrows, if there is an HOA, all of that gets, if there is a PMI also, all of that along with the other loans get included when calculating the DTI. So you got to remember, if you're planning to buy a home, you have minimum debt in your total monthly expenses.
And as you said, before you begin house hunting, talk to a mortgage person, talk to a realtor, make a list of must haves and good to have features of a home
Right.
based on what your mortgage representative advises you, where you would be comfortable making mortgage payment. You don't want to buy a big house when you can barely afford it, because you're going to need money to furnish it, you're going to need money to
Yes.
maintain it.
Yes.
So however, this is a good time to buy a home, just because mortgage rates have never been lower in the last 50 years. You are able to
Definitely.
you are able to afford a home with a lower, hopefully a lower mortgage payment. So you want to get yourself pre-approved, pre-qualified, and then begin your home search journey. And as you said, stop getting more credit, stop buying major ticket items, both during and before you begin the search. Even if you have applied for a mortgage and have been approved, you may think, okay, let me now go and buy some furniture. I'm going to need appliances. I'm going to need a Now I'm moving to suburbs, so I'm going to need another car. Let me go ahead and go on a shopping spree. I know you would tell
Not
them,
a
and
good,
I
not
would
a good
tell them,
idea.
stop. Because even if you are pre-approved for mortgage, and then you have gone and gotten more credit, got purchased more items, even if they have not been delivered yet, making an application, or it is going to jeopardize your mortgage. And last thing you want is, you have already sold your house, or you have already ended your lease, you're ready to move into a new home, and now you can't be approved, because mortgage companies do verify your credit, your employment, just few days before your closing. So these are very, very important things. As you said, there is a big list of what they should be doing, but there is equally a very important list of what they should not be doing.
Yes, definitely. Definitely. Yeah. Don't go on getting new stuff to right after you bought a home. I understand there is a inclination, there is an excitement. Now we need this for the home, that for the home, but a very strong recommendation while your mortgage process is going on, do not open up a new credit. Don't let anyone else just run a credit report or credit check just to, purchase something that is not going to be delivered till you move into the house. Wait it out. As soon as you close the home, you're then able to do things. You can buy at that time, open a new debt if needed at that time. But don't go unnecessarily out there and purchase anything, or you need to make sure that the mortgage lender doesn't find you trying to spend the money before even you got the house, and them not sure if you will be able to make the payments later, and then they are halting your process in the middle. I have
Right.
not seen that happen. Most of my clients, I make sure that I'm top of all those things, and make sure that they wait it out. But in case there is something, we try to work with the lenders too. The lenders are always willing to work, but sometimes it just gets a little bit not so happy situation.
Right. Absolutely. Absolutely. And then let us talk about down payment. What kind of down payment is required? And there are different types of loans. Some require a lower down payment. Some veterans can qualify for a home mortgages with zero payment. So, but that again doesn't happen. Doesn't is not everybody is eligible.
No.
You have to meet those stringent requirements. So why don't you tell about different mortgage programs and their down payment requirements?
So a regular conventional fixed rate from a Fannie Mae or a Freddie Mac loan would require a first-time home buyer, someone who is being the owner of a home for the first time. They can have as low as 3.5% down payment to be eligible for a conventional loan, and there wouldn't be any hidden cost involved just because you're bringing in a lower down payment. It is something, was a program that was started just to motivate the new home buyers. Even if they don't have that much, they shouldn't be deprived of owning a home, which is one of the biggest American dreams for years now. So that is one program for first-time home buyers to bring as low as 3.5% as down payment. If you are not a first-time home buyer, still you can bring in just 5% down payment, just 5%, and still be eligible for a regular conventional loan with regular rates. There are other criteria like a good credit score, your DTI, all those does apply, but there is always a good chance you can qualify for those two programs anytime. If by any chance you may not have a great credit score or your DTI is a little bit higher, there is another government program called the FHA. FHA loans also are something you can get with as low as 3.5% of down payment. You don't need to be a first-time home buyer to qualify for an FHA program. You can buy it, it may be your second home, your third home, and if needed, and if you don't have that money to bring in as down payment, you may qualify for FHA program, and it may be more beneficial for you, just so you're able to get a good home in a place that you would like to get.
And what did you say about the minimum down payment for FHA? Is it 3.5?
Yes, it's 3.5.
3.5, right.
The credit can, it has been a little bit up and down with the COVID and all, but usually it's anything below, anything above 580 credit score, you will be eligible for FHA loan.
Yeah, and then so different down payments. And then if you are below 20%, then be prepared to pay a small mortgage insurance.
Yes, and PMI is something people dread, but it's not that bad. As your LTV goes down, or the loan to value ratio, as it gets closer to 80%, in a conventional loan, that the PMI does get lower. It is based, and that is one of the reasons I always ask my clients for making sure that they can have the best credit score, because one of the things that determines your PMI or the mortgage insurance is your credit score. The higher your credit score, the lower your PMI is going to be. Higher your LTV, the lower your PMI is going to be. The lower your DTI, the lower the PMI are going to be. So these are a few things that are taken into account when PMI is calculated. Even when some of the lenders, they offer a discounted PMI for multiple borrowers. So if you and your wife both are eligible to be a borrower, then I usually advise my clients to make sure if both have a good score, let both be on the loan, and that way, you can manage to get a lower PMI.
Right.
Yeah, of course. Right, and then between 30 years, between 15 years, also the PMI will differ. If you are going with the 15-year rate, the PMI will be much lower versus the 30-year.
Right. And then what should they expect as part of closing expenses?
That's a good question, because there are closing costs involved in any purchase. Wherever you purchase, whether it's a new construction, a resale home, and you're buying it, you are going to pay closing costs. Closing cost involves things like lender-related fees, credit report fees, appraisal fees, title-related fees, and usually in a purchase, we always recommend that not only you get your title insurance for the lender, you also buy the owner's policy, which protects you against liens on the property if they come later on something. So it's always a good idea to have an owner's policy also. Another big number would be the transfer tax. The higher the purchase price of the house, higher the transfer tax. For example, Chester County has 1% of the purchase price as your transfer tax. So if you're buying a $400,000 house, get this, $4,000 is straight up front going to be your transfer tax. Apart from this, you may have to do escrow, especially if you don't have a LTV of 80%. If it's higher than that, you will have to do escrows of your taxes and insurance and a PMI in that matter. So those are when you start a new loan, whether it's a purchase or a refinance for that matter, you set up an escrow account with your lender. So you got to pay upfront certain amounts so that they have a setup in there or a balance in the account to be able to make the payments as they come. Most usually insurance would be a while if you're purchasing because you already paid it upfront at closing. That's another cost you would be paying as a part of closing costs. So insurance is something you'll be not paying soon, but taxes come up every few months, especially in our area. So be ready to be able to have that escrow set up at the time of closing to be able to let the lender pay off as the taxes come due. With the people buying homes in the planned unit developments, like the communities which have monthly HOAs, there is always something called capital contribution fund, which can range from as low as $500 to as high as $2,000 or even more maybe. I have come highest to $2,000 till now. So that's something also you would be paying at the time of closing. So typically anywhere between 10 to 20,000 is what I tell, depending on what type of house you're buying. Once I have that information, I can give you a better idea as to how much you'll need, but it makes a difference as to what is the purchase price when it comes to closing costs. The higher the cost of the house, the closing cost is going to be high, especially if the taxes are high too.
Absolutely, absolutely. Now, you also need to take into consideration the HOA or condo fees.
Yes, in the monthly payments.
In
yes,
the monthly
definitely.
payment, right. And so, just to give people an estimate of closing costs, I know that as a realtor, we always try to provide an estimate of closing costs after talking to the title company and the lender. And we provide them so that before the buyer signs an agreement to buy a house, they need to know what the closing costs should be. Because as you said, you don't want buyers to be surprised at the settlement table.
No, never.
And that can jeopardize the transaction. That dream home could be on the line if they are not ready for that number.
Correct.
So would you, I know you said it could be, a 5-figure amount, calculating inspection, appraisal, title fees, and taxes and all that. But if there was a range, would you say like a 3 to 5% or of the purchase price, or so that people are somewhat aware?
Well, yeah, I would say about I've never tried to calculate percentage wise, but yes, about around that 3 to 5% would be definitely, yeah. It always depends, of course, on a few scenarios, but 3 to 5% seems to be
right.
Yeah.
And then again, before we put an offer on it, we will be always talking to you or a mortgage person to get a better estimate.
Yes, definitely. That I always recommend my clients that give me some basic information, and I should be able to give you a ballpark number. Which a couple of thousand here and there, yes, possible, but at least you know the major amount what you will need, so you're prepared for that.
Right. Again, that is because fees that are charged by different lenders can vary.
Yes, you're right about that part. Yes,
right. Yeah.
That is one of the main things that changes how much the lenders are charging for their appraisals, for their underwriting fees, and all that. That makes a difference in the total cost. Definitely.
Right, and then some people may want to buy back the mortgage, or
yes.
or buy down by
yes.
paying
that
a percentage point.
Yes, with points. That increases, that's a part of the closing cost if they want to get the lowest, and which is very common right now, actually. People are looking into that options more if they have the liquidity, that if they can get the lowest possible rate, they don't have to worry for the next 30 years, 15 years, whatever they go with,
Right.
because the rates are at really, really, really all-time low. I can't believe it. It's so low, but it is there. And points is something you would pay to get a better rate. Also, there is another scenario, and some clients may look into that option also. Sometimes you may need to get a higher rate, and which would allow us to give you lender credit, which can help you cover some of your closing costs. So you can go either ways with your rates, and that's another thing we discuss with our clients. We ask them if they want, if they don't have that amount to bring it at closing, they can look into options of going with a higher rate where they would get enough credit to cover the costs, which will help them. And then, not currently, but in some scenarios, they have been right now been able to refinance now, because
Right.
at that time they took a
Yeah.
high rate, but now it is helping them get a better
Yeah.
rate.
In this summer, late spring summer, the refinancing business has gone through the roof, and I know you guys have been very, very busy with that, on top of very high demand for homes, for home buying. So uh, the last 50 years we have not seen something crazy low rates, and it has helped. It has made many people being able to afford a home they could not have otherwise.
Definitely, yes, yes, yeah. It has helped many people right now buy a home, fulfill that American dream of owning a small little house with a white fence. And I've been part of many of those transactions, and that feeling, the how I am treated at that time makes me feel so much better, because this has been a year where I have got a lot of thanks, because I'm not going to take the full credit. Yes, there's a lot of things involved in getting these lower rates. Not good so much, but it's there, and it has helped many people. That it's something that I keep telling myself when I see the scene around with the COVID and all. I said there are some people still who did benefit out of it. Also, they were able to get something that they never thought they would be able.
Right, absolutely. uh, the next thing I want to talk about is what time frame should a buyer allow for the process, from the time they begin their application process to the settlement. What kind of time frame have you seen? And I know that changes, it is variable, but it is good to ask people to allow more time than is required, so that uh, you you meet their expectations, and it just doesn't run into situations where things get delayed and makes people if they have to sell their homes, or if they are renting and they need to get out of their rental homes to move into their homes, they should allow 35, 40, 50, 60 days. So tell us about what you think is a good time.
Good time. I'll go with 45 days. Definitely works 45 days. We have been able to close even in the busiest summer in 30 days. And it was a rush. It was definitely a rush. We had our, there were days we were anxious about, the client was anxious about, but we made it through. But to avoid all that, I usually suggest that once you are ready to go through the process of getting the loan, 45 days is the ideal number, with you being prepared with all documents on your side, we being prepared with, we know what is happening, we know your background, because we already been talking earlier, so we know the time frame at that point, and we would definitely recommend 45 days. Sometimes you are better off going all the way 60 days in case you are buying a house that has that's a few years old. You want to go through the inspection, make sure the inspection report is satisfactory and all that. So don't rush yourself. That is one of the main things, because we may be able to rush, but then you don't want to be in a spot where you rushed yourself, and in the end you are not sure if this was a good date. You would have preferred if you had some more time to do some other things. So and yes, with new construction, lock your rates when you finally are sure that the home is ready for you to move in. There are very, very few lenders who give a longer time frame for a lock period, but say most of the lenders go with 60 days, especially right now with COVID. There are sometimes 90 days offers also. Before COVID, we had that option very easily, but right now it's more of a 60-day option. So be in that right window, especially with new construction, because there can be a delay in new construction. For no fault of anyone, there can be delays. So make sure you don't want those delays to cost more with the loan process or anything else for that matter. So make sure with the builder, if you are buying a new construction, when is the right time? Or if you're, you have leases also, or you're selling another house to get into a new construction, you don't want a big gap between the two either ways. So be careful about new constructions when you are locking the rates, or when you are trying to end a lease or sell your other house or something.
Yeah, you're right. Because of the COVID, construction business, home improvement business has been booming. However, there have been times when things get delayed. There has been, in May, when things were being relaxed, people were able to go out and do their. They were not forced to lock down. People started spending money on a lot of remodeling, and supplies were short. So that definitely can affect new construction. And so, as you said, you got to be very, very cautious in applying and locking it in, so that you don't get into additional fees and other scenarios.
Right.
So I think we covered a lot of good things. Let's just briefly summarize what we talked. So, sure. I would like you to review what they should do, what they should not do, what down payment, credit history, mortgage application process, and closing costs. If you can summarize that in like 2 to 5 minutes, it would help people understand better as a summary.
Sure. So the first thing I would tell, if you're buying a home, get your credit checked. That is definitely important. If there is an issue with your credit score, if you think you want to improve it, find out from your mortgage broker, whoever you're working with. They usually may have some contact with a credit counselor who can help you improve your credit before you get into the home buying business, because the credit definitely plays a very important role in getting a good score, a good PMI, in case you're bringing less down payment than the usual 20%. Definitely do not try to open a big debt or open credit cards. That can affect your credit scores, as well your monthly DTI. Those are important things that the lender is looking into. I also do recommend, if you're planning to switch into jobs, maybe that you want to think twice if you can delay that. But it's okay if you don't have a choice and you have to. That's understandable. But if needed, don't make it complicated. Down payment wise, 3.5% for first-time home buyers, 3.5% for first-time home buyers, as well as FHA loans. That's all you need for down payment. If you are not a first-time home buyer and you're not going for an FHA loan, 5% is the minimum down payment you need to purchase a house. When I say down payment, that's one amount. That doesn't include the closing cost. Be make sure you talk to your realtor as well as your mortgage broker to make sure you have that amount available for you for closing costs. It can range anywhere between 10 and 20,000 depending on the home value. It can be higher than that if the taxes are very high too. So make sure you definitely talk about your closing costs before you get into or before you make an offer, so you know that your funding is there, your bank balance is there to be able to cover not only the down payment as well, but also the closing costs. Most of my low lenders that I work with, they have regular conventional loans with no prepayment penalty, which means that if anytime during your loan term, if you have some money and you want to pay it down, that's fine. They are not going to charge you anything. So it is okay to bring a minimum down payment at the start of a purchase transaction as much as is needed, just as much as needed. And then if whenever you get that extra amount in your bank and you are ready to put down towards your loan, you can do that later on. Don't wait till you get 20% because it may take a longer time. So get it done when right now the rates are really low. So it is worth looking into the option if you have that liquidity available for you. I guess I think I covered anything I'm missing, Vipin?
Yeah, you did mention about not changing job, because that is a very important factor.
And it's not always on your control, but if possible, something it's still doable, not a problem, but don't want to complicate things for yourself.
Absolutely. Yeah, keep it simple.
Yes.
And make sure you have the closing costs and not try to run into any additional debt by buying car, furniture, appliances, or anything. Just hold off until you have moved into the new home, and then you may get a better idea as to what you need. If you buy something beforehand, not only it can jeopardize your mortgage application, but you may buy something that you may not be ideal for your home. So just take it easy, move into the home, and then gradually start making it your home.
Yep. Yeah, that would definitely help everyone, including the client themselves.
Right. And the mortgage rates had been very low in the middle of during late spring and early part of summer, and even during the summer, but they have gone up a little bit, right?
They are actually moving in what I call is like going up the hill, down the hill.
Right.
But I would still say they are still lower. They were lower in spring and summer, but they are even lower right now than they were in spring and summer. The refinance maybe not so much because there was a fees that was imposed on the lenders, which is going to start actually from December. But lenders have been preparing the clients for that, for especially the loans closing into December. But the purchase rates, they are the lowest, I can tell you.
Yeah, and today I was talking to Adam Kamins, who is an economist with Moody's Analytics. I had him at 10 o'clock on the Small Biz Spotlight show today. And he did mention to me that because these are tied to the 10-year treasury notes, and because they are stable, the mortgage rates are likely to remain low for some more time. So home buyers should be looking at it as a golden opportunity to buy a home and taking advantage of this historically low mortgage rates, which have not been seen in the last 50 years.
Yes, definitely. I will agree with him 100%.
They should definitely take their own time in making sure that the home that they are looking to buy is their home, is their dream home, because there are a lot of expenses involved in buying a home, and if that is not the home that you think you will like or you will enjoy, it is just expensive. It is not something that you buy from Lowe's that you go and
Can return
return
it
it the
anytime.
next day. Yeah. So while we encourage all our home buyers to go for it, they should do their due diligence, and for that, realtors, mortgage people, tax advisors, CPAs, real estate attorneys, tax attorneys are the people that they should be talking to. They should also be talking to a home inspector and all those team members that they would be dealing with as part of their home buying journey. So do your due diligence and consult all these team members that are essential to embarking on your home buying journey, and hopefully you will have a very good pleasant experience. uh, Home buying is does give you more room, more space, and there are tax benefits. There are uh, 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 all those opportunities. However, it does come with responsibilities. You are now responsible for maintaining homes. If the toilet is broken, it is leaking, it's not that you can call your apartment supervisor, they'll come and fix it. You are responsible to fix it. But there comes with joys of home ownership. You get to enjoy more space, you have your own backyard, you can have your own deck or swimming pool if you decide to have one. And during this COVID-19 situation, National Association of Realtors found that people who have been living in small apartments or small homes need office space, a designated office space. And with with so many people being able to work virtually, you could be anywhere. You could be working in a remote part of the country, and all you need is have space and good internet connections. More and more companies have been able to offer their employees virtual work from home environment, so you can fulfill that American dream by buying a home from where you can work remotely if you are able to do that. So definitely take advantage of that dream. And
One other thing I just
yeah,
thought of it. Between when you rent and when you buy a house, with the current rates, there's a very good chance that you are actually building your equity in the same monthly payment that you would be doing when you're renting. So that's
absolutely
something you should also think about, because in long term, this is you building your equity also when
right.
you're purchasing a home with such low rates. So
And
that's
if
another,
you are,
yeah, for all
yeah,
those first time home buyers, this is a
right,
special
right, right,
advice for
yeah,
you guys.
yeah. And then if you are renting, you are paying somebody else's mortgage. You are building their equity.
Yes.
You would rather be taking advantage of the current low rates and start building your equity. Start paying your own mortgage. And many instances you would be spending less money on your home mortgage rather than paying rent.
Yes. Presently, that is a very, very big, thing that can happen. It is possible, very possible.
Right, right, right. Well, that was great conversation we had today, and thank you very much for all the great suggestions and tips that you offered. We
You're
will
very
be
welcome.
talking. We will be talking, and hopefully, you'll be able to help many of our first-time home buyers and other home buyers with their mortgage. Next Saturday at 10:30, we will have with us home inspector, and we will be talking about how home inspection and home appraisal play a part in your home buying journey. So do join us next Saturday at the same time, and that would be the next episode of our home buyer workshop. Uh, Sweta, thank you very much for joining us. And
Thank
I
you for
also want to,
inviting me
sure,
again.
it's my pleasure, and I appreciate you providing all the tips. I just want to tell our audience that we have this weekly show where we bring in experts and local small mom and pop businesses, artists, professionals, community organizations to talk about issues facing our community, and also to highlight community about services and products offered by small businesses. So if you are a small business or a community organization, definitely reach out to me and we can consider having you on our future show. Thank you very much for joining, and I look forward to seeing you again next Saturday at 10 o'clock. Thank you very much, Sweta, for joining, and thank you all our viewers for joining in. Have a
Thank
good day.
you.
Bye-bye.
Everyone
Thank
have a
you.
good day. Bye-bye.
Bye-bye. Thank you.